If you're a real estate investor, you know more than anybody how important the housing market is, and how important it is to be able to predict how the market is going to behave. Since the real estate market depends on many other market trends, it can be difficult to pinpoint exactly how it'll behave, but it is possible to give some predictions and forecasts for the real estate prices. In this video, we're going to be going over some of the Los Angeles County market trends, as well as some predictions for the next year. First, let's look at an overview of the current markets in Los Angeles. We'll be going over the metrics, the median home price, median listing price, price appreciation, and much more. First off, we'll go over Los Angeles home values, or more specifically, the median home price. The median home price is basically the middle point for real estate prices. It's important to note that this is not the same as the average home price. It is the very middle of data set, so the middle of all home prices in the area. The median home price in Los Angeles right now sits at around $928,000. This value is around $600,000 more than the US median home price at $130,000, more than the statewide median price. In the past year, this figure has risen about 16.7%, and in the past 5 years, the home price growth has been at about 114.2%. Another important aspect to look at in the real estate market is the listings. Since home sales are affected by the number of new listings and active listings, it is important to look at those before making predictions. The median listing price for a home in Los Angeles is around $941,000. This number has actually gone down about 5.9% in the past year. Consequently, the number of existing home sales has also gone down. Also, the number of new listings has been 1,006, which is a huge decrease of about 22.4% from last year. The number of active listings has also immensely decreased, falling 39.3% to 8,555. The Los Angeles rent has actually not suffered in the past year. The rent growth has been about 11%, rising to about $2,644 per month in rent. This means that the price to rent ratio for a rental property is about 29.25. Next, let's talk about the Los Angeles population. And although these numbers are not exactly about the real estate market, they have a very strong impact on things like mortgage rates, interest rates, and the California housing market in general. The population of Los Angeles is currently sitting at just over 3.9 million. This is obviously a very large number, especially considering the size of the entire city. Within this population, the unemployment rate is about 6.2%, and the median household income is only about $62,000. If this number seems small compared to the median home price, it is. So now that we've provided an overview of the current state of the Los Angeles market, let's look into some real estate market trends that could help us predict the housing markets for the next year. In general, the Los Angeles housing market has been consistent with those of many other cities. These recent trends are particularly the result of COVID-19. Also, most of this information is provided by one organization, the MBA, or Mortgage Bankers Association. So these are the forecasts for the median prices of existing homes, the housing inventory, and the median sales price. The first prediction of Los Angeles is that there will be a steady increase in the median home value. This means that there will still be an increase in the home prices, but they'll be increasing at a slower pace. Over the past year, the Los Angeles housing market has seen an increase in home values as much as 15.9%. This has been caused by lower borrowing costs, increasing demand, and a lack of inventory. This means that the home values will still see continued growth, but nowhere near last year's growth. The reason for this is that there's essentially not much more room for values to continue increasing. Thus, the home value will only increase around 8 to 13% in the next year. This leads us to our next forecast, which has to do with rising mortgage interest rates. For home buyers or international real estate investors, interest rates are one of the most important things to consider. High interest rates can completely change the value of a property, so any changes can be drastic. Last year, the interest rates on a 30-year fixed mortgage rose by 0.33%. This low percentage is mostly due to the regulation by the Federal Reserve System. These regulations basically restricted the interest rate growth as the home prices rise. However, since inflation has become a major threat, this might change, but it is still too soon to determine how much rates will be increasing. Another prediction for the Los Angeles housing market is that there will be a very small housing inventory. What this means is there won't be as many houses in the market for sale. This is a huge problem because it'll only drive the prices of homes further up. The reason for that is due to a simple supply and demand. As supply goes down, the demand goes up, and this higher demand means higher prices. Sometime throughout the year, there may be a decrease in bidding wars over houses for sale, but this does not take away from the fierce competition for desirable and median price homes. Similar to many cities with large populations, it's actually cheaper to rent in Los Angeles than it is to buy. One of the main reasons for this is the hefty real estate taxes imposed on homeowners in the area. Other factors that have led California residents to run to rental markets include low inventory, lack of property, and flexibility. Although this may not be great news for renters, it's amazing news for investors. This is because they'll have a chance to cash out on their investments with large sources of cash flow. As mentioned before, the home value has increased about 15%, so due to this, the rental prices have also increased by about 11%. This number will only keep increasing as the value of homes goes up, and this is because as homes get more and more expensive, renting becomes more popular. So now that we've gone over some of the forecasts of the next year, let's go over some of the trends that we might also see going into the new year. Many of the trends that are being witnessed today in Los Angeles are products of COVID-19. As you know, it's pretty rare to find some sort of real estate investor that wasn't impacted by COVID-19 on their investments, so we're going to go over some of the things that have happened as a result. COVID has had a huge impact on everyone's lives no matter where you live, and California's housing market was hit pretty bad. We actually have an entire blog post dedicated to the California housing market at large, so make sure to check out that information with the link down in the description. So with rising housing prices and lowered housing sales, the pandemic has been a nightmare for anyone looking to buy a home in Los Angeles. Since many people have hesitated to put their homes on the market, it's hard for the Los Angeles metro area to meet the housing demand. This means that buyers have been met with extremely steep prices for a home that would have not cost as much before. Overall, these high prices have begun to price out buyers and make them leave Los Angeles. As a result, Los Angeles has suffered a negative net migration. This means that buyers and sellers are not able to keep up with the prices of the market, so they simply leave. One of the most impactful ways that the pandemic has affected Los Angeles housing markets was spiking unemployment. With an increased unemployment percentage, people have been more hesitant with spending their money and in turn have not wanted to buy any homes. However, this was only a temporary setback. As soon as the Fed announced that the interest rates will be maintaining a very low rate, the market trends started picking right back up, and even better, the setbacks that were caused by the unemployment and the lack of demand were completely taken over by people rushing to buy homes after the market started to pick itself back up. But the only thing that has not recovered from the pandemic is still the unemployment rate. Sitting at a rate around 6%, the unemployment rate is still single-handedly holding back the ultimate growth of the real estate market. For Los Angeles to fully recover from the pandemic and return to all-time high markets, the unemployment rate must go back down. Another aspect of the pandemic that has messed with the Los Angeles housing market is the fact that so many people are now working from home. In big cities, many people move to the center of the city to be close to their workplace. However, when they're able to work from home, there's no longer a need to be stationed in the city. So for this reason, the demand of urban housing has been decreasing. This is because workers can simply opt to stay home and not really have to commute within the city. So as a result, Los Angeles saw a lot of people trade their expensive city apartments for more spacious suburban homes. So this leads to some predictions that say there may be an uptick in demand for suburban homes. One last thing that we'll be discussing in this video is the rate of foreclosures in the county. According to some statistics, lenders foreclosed on 25,209 US properties in the third quarter of 2021. This is a 32% increase in foreclosures from the previous quarter, and even crazier, that's a 67% increase from the year before. The reason for this increased rate of foreclosures is the expiration of government assistance programs. For a couple years, the government had restricted foreclosures and had basically forced lenders to forgive late and missing payments. However, now that these programs are expiring, lenders are finally able to act on these missing payments. Thus, homeowners will have to find a way to come up with the money before their property is foreclosed. Well, that is it for this video and the Los Angeles housing market predictions. I hope this was helpful, insightful, or you just got some education out of it. If you did, then don't forget to like and subscribe. And if you're a property manager or landlord and looking for people to connect with, join our exclusive Facebook group. And for more property management tips, click on this video. I will see you in the next one. Bye!